Hello, and thanks so much for checking out the Coin Stories podcast on YouTube. I'm Natalie Brunell, and I'm excited to share my guest this week is the incredibly brilliant Lyn Alden. Lyn is an investor and independent financial analyst who has been performing investment research for more than 15 years. She founded Lyn Alden Investment Strategy in 2016, and she examines advanced topics for institutional investors, but also breaks those topics down for retail investors to understand what's going on in global macro. She is bullish on Bitcoin, and her goal overall is to help people build wealth and financial freedom. And she has a fascinating backstory on what inspired her to make smart decisions about money. She is the first of hopefully many female Bitcoiners on Coin Stories. Here's Lyn. Okay, well, Lyn, thank you so much for joining me. I'm so excited to talk to you, and you're actually the first woman on my podcast, so welcome.
Happy to talk. And there's plenty more I can recommend if you want to have more on.
I can't wait. That's my goal, is to get more women into the Bitcoin space. So I want to start at the very beginning. And, I read one of your blog posts about your childhood, and it was just fascinating. I couldn't find where you were actually from, where you were born, but I know that you were homeless for a period of time when you would have been in elementary school, right? So talk to me a little bit about where you're from and your childhood.
Yeah, I'm from the Philadelphia area. And so, when I was like 4 or 5, I did experience homelessness for a while, and that lasted for a couple years, few years. And it took a couple different forms. I mean, we were in homeless shelters, and at the worst point, we were living in a car. And that's, there's a whole backstory there. I mean, separated parents, some substance abuse issues, things like that. But eventually, I transferred custody over to my father, and grew up in a trailer park. So that was a step up from being homeless. We at least had a stable environment. And so, from a young age, I just got into saving and investing pretty early. And it just combined with the fact that I had a knack towards quantitative things, so math, science, money type of things. And so that's kind of how I started. And ever since then, I've just kind of ramped that up over time.
Yeah, I saw you got pretty personal in that blog post. I mean, are you able to share anything more? I read that you said your mom had a really high income and had like a sports car, and then suddenly things went sour, and your dad was sort of different. He was always really big on saving, but he didn't invest, right? He had a lot of money in cash. Can you talk a little bit more about that?
Yeah, they kind of both had two different halves of the situation. So my mother, she went into law, right? So she had a very high income. She was doing well. She had a very interesting background. She traveled when she was very young, and back then, I mean, she was like, women in law school were pretty uncommon. So she was actually one of the very few in her school, and so she went through that process. But eventually, I don't want to go too much into her story, but that broke down, and so that had a very different outcome, and she didn't really have savings, and so that went off course. But she's a very good person, and so she just had those difficulties in her life. Whereas my father was the opposite scenario, where he didn't complete high school. He eventually got an equivalent certification. He became a police officer. And then he eventually, his second career was in alcohol recovery. Like he was working at a facility that would help people recover. And so he always had kind of the working class salary, middle class salary. And he never really saved, and he never really built wealth. But he had, for example, a pension from his police officer days. He always had enough money on hand to pay whatever would happen. He always had some savings, in other words, but he didn't really say, put aside $10,000 a year and invest it and compound that over time. And so he found himself often kind of constrained in some ways, but it was overall, a more responsible situation.
Yeah, no, I saw that he had like a really great credit score, and I think a lot of people are in that boat where they have a lot of money that they're putting away just in the bank, but they're not really, capitalizing on making returns and investing, because I think people don't know even where to start. The other thing I thought was interesting is that you talked a lot about how really being in that forced simplicity of living in homelessness has really informed, how you view the world and how you view money. So when you were homeless, I mean, at that young age, did you start to realize that, hey, I don't want this to be my future? I want to make sure that I'm financially secure. Did you get curious about money?
Yeah, but absolutely. I mean, it's probably right after that period. So during the experience, I was still pretty young, and obviously I didn't want that approach anymore. But it was more about day to day, focusing day to day. And I would still, partially go to school sometimes, right? So we kind of would rotate, move around, and I would attend some school for a few weeks, and then we'd move again. And so, it's kind of a challenging environment. And I was mostly just trying to do what kids do and kind of like, find friends to play with and read books and things like that. It was kind of after I got out of that situation, by the time I was like, say, 7, 8, that's when I kind of, got into that mindset of like, okay, I want to definitely do better than this. I want to have, I want to basically have that security, that stability, and grow things over time. And so when I, learned the math of exponential compounding, and so I just kind of started that path from there. And a lot of it was just realizing that you can be happy without spending a ton of money on material goods. And so that stuck with me all through growing up in a trailer park, going to college, then graduating with student debt and getting my own place. And it was all this process of finding ways to be happy that don't require a lot of money. So being in, exercising, eating right, engaging in hobbies that you find enjoyable. Um, even hobbies that can make you money, right? Instead of costing you money. And so I built that up over time. And eventually, I mean, as my income grew, I would increase the expenses, but at a slower rate than the income going up. And so basically that gap that could be, put towards savings and investing, that still kept growing.
When you see the problem of homelessness kind of balloon here in this country, I live in Los Angeles and it's something that I cover a lot for my news job. Do you look at it a different way? And has your experience being homeless really made you feel like you want people to understand that there are a lot of stories out there?
Yeah, I mean, a lot of people that work in finance, they often come from a decent background, and so that kind of problem can feel detached for them. Whereas I feel like I have a foot in both camps, because right now I'm very well off, but of course I came from that earlier background, and so I have that experience. And so a lot of what I focus on is kind of say some of the policy issues that maybe led to some of this rising homelessness. So, the rapidly increasing, say, housing costs, combined with the fact that, say, the United States has the highest per capita healthcare expense in the world, even though our outcomes are not really better than most other developed countries, especially for the lower half of the population. And so, we have these kind of structural issues that I think have been building for several decades, and it's really starting to manifest in the past 5, 10 years in a more visible way. I think it's becoming harder for society to ignore, especially since the great financial crisis that in many ways a lot of people didn't recover from.
Yeah, I think that's fascinating that not a lot of people look at it from the fiat trickle down and how that impacts things like homelessness. But I read that you started investing at just 16 years old. Warren Buffett was like an idol to you, and it seems like you read a ton of investment books. You were like a Matilda for the finance world when you were young. So, I mean, how did that happen? How did you start investing at 16?
Yeah, so it started a little bit before that because I started with saving cash, and then my first investment was in coins, so gold and silver coins. And so I had an uncle that had this like box of like foreign coins, and they were like the cheap kind. But I was like, oh, that's a coin from Egypt, or that's a coin from Turkey, or that's a coin from France, and I thought it was really neat. And so I started collecting coins, and then eventually, for like for like Christmas and things like that, I would get, say, silver coins. I eventually bought some like, very small gold coins. And of course, back then that was the late 90s, early 2000s. And so, it was much cheaper back then, right? So gold was only a few $100s an ounce rather than, 1800 an ounce, whatever it is today. And so I kind of started building that collection. And then eventually, by the time I was a teenager, I was like, okay, I want to move into equities now. And so I would, read. By then the internet, was more commonplace, right? Because it was like the late 90s, early 2000s. And so I basically just read all these different investing websites, learned about, say, value investing, right? So learning, instead of just seeing a stock as a price that goes up and down, it's like, okay, there's actually a company behind this business. You can analyze it with price to earnings ratios or price to book ratios. You can see what the growth is doing. You can look at the balance sheet. And I kind of looked into the whole process of, say, someone having a more contrarian mindset, like, say, Warren Buffett will, buy something after it's gotten cheaper. When everyone else is selling it, he'd go in and buy it. And so, for example, I kind of had that intuition earlier on where, I was maybe, how old was I? I was like 14 when the dot-com bubble was like unwinding, depending on what year you look at it. And my dad sold all his investments and said, "Yeah, the stock market's casino. I'm getting out." And I was kind of like, this is like the better,
Oh
this is
yeah.
when you buy. This is, and I didn't really know what I was doing, but I was like, it goes up and down. Here's like a 30-year chart, and like it just went down a lot. Why would you sell now? But if, I didn't really have the sophistication to analyze it more detail. But eventually, I built that up over time by having access to all the free resources that were on the internet at the time, and that are even bigger today.
Well, this is so fascinating because I would expect you to have studied, finance or economics, but I saw you went to Penn State and did electrical engineering. So how did that happen?
I mean, part of it was just in school, I always liked science and math quite a bit. And the engineering side just appealed to me more in a practical sense. I mean, you could get a good salary right out of a 4-year degree. And, I didn't really want to move to New York, for example. I didn't want to have the investment banker lifestyle. And so I pursued engineering. But at the same time, I still kept investing on the side. While I was in college, I had a little investing blog that I would do and things like that. And so I still kind of kept up that, experience on the side while also moving into, studying technology, studying engineering. And then I eventually merged them together a little bit more with my master's degree because I focused on engineering management that, had, courses on financial modeling, engineering economics, discounted cash flow analysis. And so, I started my career as an engineer, but I eventually shifted more into managing the finances of an engineering facility and basically engineering management type of thing. So I kind of pulled those two forks back together eventually.
Yeah, I think that's interesting because it reminds me a little bit of Safedeen's background as well, where it's that intersection of money or finance as well as engineering. So you can kind of break things down. Did that help you with just understanding things like financial models? Because it's almost like you're predicting the future. And a lot of this is based on people's emotions, right?
Yeah, I mean, well, valuations are in part based on people's emotions, but for example, company earnings are based on fundamentals,
Yeah.
and so you can't say, okay, this stock is trading at a 15 price to earnings ratio, and I think 2 years from now it'll be trading at a 25 price to earnings ratio. That involves technical analysis or basically analyzing sentiment. Whereas what I'm doing is saying, this stock is historically cheap. It's got a good discounted cash flow model. I think that the earnings are going to go up by this much in a range over the next 5 years, and therefore I'm investing in it. And so I can't tell you exactly what that price will be, but going back to the idea of breaking it down into small pieces, I'll say, okay, what is top line revenue going to do? And you just kind of work your way down to the bottom line, and then you apply the valuation layer. You also look at global macro. What are the big headwinds or tailwinds that might affect it? And so I do find that the engineering approach of kind of, taking complex system, breaking it down into subsystems, understanding them individually, and then putting them back together is really helpful in finance, whether it's a specific company or whether it's analyzing some macro situation.
This is all so fascinating. I just want to hear you talk for hours because I want to absorb your knowledge. So, talk to me about your early 20s. When you left school, what were your first jobs? Because I know you kind of projected your future income, and then of course life happens, right? Some unexpected things happened in your 20s. I know. I think you had maybe some health issues and medical bills that came up, and someone passed away. So, what were your 20s like?
Yeah, so basically that was I was working as an engineer, electrical engineer, and so I enjoyed my job. But yeah, I started to run into headwinds, and I said, okay, I'm going to budget this much. Here's my income. I knew from my organization roughly what I could make in say 3 or 5 years if I do well. Like I was like, okay, when I'm a mid-level engineer and a senior engineer, I can make these salaries. And so I kind of projected out, how I would say build wealth or build savings. And that was on track for a while, but then I ran into some headwinds because my father died, so that was an issue. And then my mom also, she started requiring financial support. So there's this kind of, notion today that millennials are like living in their parents' basements, and whereas I was kind of the other way around, where I was, supporting a parent rather than having a parent support me. So I've been on my own financially since I was 18 or so, and then by that point, it was actually even more than on my own. It was also, supporting someone else. And so, and then, yeah, I had health issues that weren't fully covered by insurance. And so, because, insurance, depending on what plan you have, can only cover so much sometimes. And you start have to pay out of pocket. And so, those were setbacks for someone that, when I graduated college, for example, I had assets because I hadn't been investing, but I also had student debt. And so I actually had a negative net worth. And so, I had to build up from that hole. So I would channel money into paying that off. I would channel money into assets. And so, I ran into some headwinds, but eventually I got back on track, and eventually blew past some expectations, by going into financial research and basically always having a side hustle, always having extra ways of earning income rather than just relying on the job and kind of sticking to that 40-hour work week, right? So instead, I would go and say work 60 hours a week, and basically learn more and produce more so that I could accelerate that kind of starting phase.
On a personal level, how did you deal with some of like the pressure or the stress? Because I mean, your situation, it sounds like there's just almost this fear to not end up back on the streets. I mean, but some people would just break down and feel like, maybe they would get depressed or they would turn to something like substances or something just to make them feel like they can cope. How did you get by when things were rough and you had all this pressure to support your family and to make money when you were financially independent and you were so young?
Well, I was fortunate enough to have a steady job, and so that certainly helped keep stress low. I would say that, I mean, there were periods that were more stressful than others, and so, for example, in college, the financial crisis was happening when I was in college, and so it's kind of like, okay, I have negative net worth, and like it'll be hard to find a job after this. So one of my internships, I had a great internship, and I was going to go back the next year, but it got canceled because all their interns got canceled because the company was just trying to stay solvent, and so they're trying to keep their permanent employees. And so, for example, there's headwinds like that, and I was kind of like, that was kind of the peak feeling of instability when you have negative net worth,
Yeah.
very little income. I had a part-time job, and so, but once I started, having an income, decreasing liabilities, increasing the assets, I did have savings pretty early on at that point, and so, it's one of those things where I had a lot of stressors, but at the same time, I could go 12 to 18 months without a job if I needed to because I
Wow.
had a lot of investments saved up by that point. And so, when there were headwinds, they were certainly stress points. But because I still kept making progress in most years, it wasn't as stressful as it could have been. It wasn't as stressful, say, my mom experienced when she was having that difficult phase in her life, or as stressful as other people experience. And I mean, people have different life experiences. So someone who has kids early, for example, and then finds themselves in financial stress, that's a whole nother layer that they go through. Whereas for me, it was, more like supporting a parent, which in some ways is less stressful than say supporting kids when you're financially unstable.
Sure. Do you remember some of your early investments, like maybe one on the positive end where you were like, wow, I struck big, and then maybe another where you totally, made the wrong bet and lost a lot?
So my first stock I ever bought was Adobe, and that's both a good thing and a bad thing because obviously Adobe did extremely well. But the funny thing is I sold it too early, and so I eventually bought it back later and then wrote it up for like another like double or triple. But like there like it would have been like say a 20-fold increase from when I bought it, back in the early 2000s after the dot-com bubble. And so, but that's a case where it's, both a good thing and a bad thing. You pick all the right investments, and then you just like, oh, it went up like 40%, I'll sell it, right? And so it's kind of a funny story there. My investing style rarely has like big, massive like losses. Just the way that I diversify and the way that I kind of, pick pretty stable companies. Um, but for example, a lot of my mistakes are more along lines of selling. I mean, the same thing. I bought Microsoft pretty early, when it was in that kind of, languishing phase well after the dot-com bubble. It was kind of unsuccessfully getting into mobile, and it was just kind of people were like, oh, what's going to happen with Windows as we shift towards these other platforms. And so, but I bought it. It basically was a value stock in many metrics, and it went up dramatically, and I sold it, and it's like I should have just let it go up like another 5x, right? So, and I eventually, again, I got back in, but there's like a big gap in the middle that I could have just let it compound more so than I did. Uh, there's another investment I made early on, Brookfield Infrastructure Partners. They're a global infrastructure play. They own a lot of different assets like ports or electrical transmission lines in different countries. And so that was one of that was, I kind of fixed that issue that I had of selling things too early. So I kind of let that run for a decade. And so I let that one compound multiple times over. Whereas a lot of my misses were buying things that kind of went sideways for 3 years when the market went up 50%.
Mhm.
And it's kind of like, well, this thing ended up, languishing. So I think, even though I was younger and technology, knowledgeable, I think one of my mistakes early on was being too cautious with the valuations I pay for high quality companies, either selling them too early or not buying some of the best companies, and then instead buying things that just kind of, you know, did okay, but failed to keep up with some of the, say, the FANG names.
So you were able to retire by the age of 33 because you clearly were making some very strategic moves with your investments. How did you go from your 20s where you were kind of paying off medical bills and dealing with, supporting your family to being able to retire at 33, which I guess that would be so many people's dream.
Mostly by having that side work, right? So I because I had a hobby that I enjoyed a lot that I could make money from, which is basically you're in the early phase. I had investing blogs that made a little bit of side income. Then in 2016, when I launched my website, Lyn Alden Investment Strategy, I focused on a more serious research business, so that say say high-end retail investors could get a lot from, as well as institutions read it. So large hedge funds subscribe to it, pensions subscribe to it. So it kind of covers that pretty broad range. And so that's been a very successful project. And that has, but it's one of those things, it's like an overnight success, but it had like say a 10-year learning curve in front of it that people don't see, where you just kind of gain knowledge, you have like little side projects, and then eventually you start your real thing. And it's like, okay, well that's it seems like it happens quickly, but it's a lot of pieces came together leading up to that. And so that helped kind of accelerate my, basically when you like a story I like to use is, for example, if say you're making 60,000 and your expenses are 40,000, then you can save 20,000 a year. But if you can find a way to make another 20,000 on the side, it only increases your income by 1/3. But if you then save all that money, if you keep your expenses the same, then you've doubled your savings. Instead of saving 20,000 a year, you can save that 40,000 a year. And so that's kind of the math I used, where I would increase my income by quite a bit, but my expenses would only go up very marginally. And so that extra amount could just go into investments. And then, we've had, say 5 really good years of gains, really 10 years. I mean, ever since the 2009 bottom, we pretty much the market's been very strong. And so that combination has resulted in, a big diversified pool of assets that allowed me to, eventually leave my engineering job, and be more financially flexible. And I still continue to obviously to do the investment research side of things.
Well, you're a prime example that the information's out there if you want it. So, why don't you think more people, just like the average American, is engaged in investing as opposed to, I think Pomp just recently tweeted or had on his show the statistic that like almost 80% of Americans live paycheck to paycheck. They don't have enough to survive an emergency. I mean, the information clearly with the internet, YouTube, books, it's out there. Why aren't people diving into it?
But we started to see it somewhat this past couple years, right? So when retail investors poured into the market after the COVID crash, and poured into Robinhood and bought the airlines and bought all the stocks like that. So actually we've had an uptick in retail participation in investing. And of course, that can be dangerous because they can get into meme stocks that eventually crash. They can over leverage themselves, but they also learn, and they have these shared resources, right? So there's, like, I'm speaking to a certain audience, whereas like there will be someone in Gen Z on YouTube speaking to other Gen Z investors. And so there are these kind of networks of they can actually be pretty sophisticated in some ways. You have that big spectrum of low information investors, and then some of them are actually pretty sophisticated. And so I think that's a good thing. Overall, it's people have you can only be an expert in so many areas, and it is a challenge that investing is kind of it's a complex subject,
Mm-hmm.
and people only have so much time in the day, and so it's unfortunately not been something that we prioritize in school as much as we should have. So I think it really starts with that. But then from there, it just, people have just kind of detached from it. And I don't really know the exact reasons why people don't focus on it enough. But I know, for example, that, I've had to put a lot of time into it in order to learn it over time. And so, of course, that comes with certain sacrifices in other areas. I mean, I've worked a ton over the past decade. I worked long hours. And so that, that can obviously affect relationships. That can affect your health in some ways. You have to kind of step back and say you can only work so much, and you can only focus on so many different things. And so I think it is challenging that a lot of people just haven't had the time or haven't had the inclination to go into it. Whereas I think, I like ideally more people would learn the basics at least, and know about savings versus expenses, how to save it, how to have, say, how to build wealth gradually, rather than, kind of, not knowing how the stock market works and either speculating or avoiding it entirely,
Yeah.
and kind of have that middle of the road approach.
Yeah, no, I totally agree. I mean, even my parents, they immigrated here. They always viewed the stock market as extremely risky, and they thought it was more like gambling. And it's sad to think that a lot of people don't take advantage of it, but it is really intimidating. And I think you need to, go out there and try to absorb as much knowledge from people like you as possible to really capitalize on some of the money that you take home, which seems to be less and less these days. So I want to kind of talk about that. Since you dove into that investment research, you sort of saw how the sausage is made almost, you pulled the veil back. When did you start to feel like maybe fractional reserve banking, wasn't the best thing for the monetary system, or, when you started to notice inflation? I mean, can you talk to me about your journey of just getting to the place where Bitcoin might seem to have a great value proposition for you?
So a lot of it comes down to the fiscal situation, the biggest inspiration for me was Ray Dalio, because he popularized the idea of the long-term debt cycle, which is basically that you go through these periods of, the normal 5 to 10 year business cycle where the market increases debt in the system. Some of it's productive, but then towards the tail end of it, it starts to become unproductive and speculative. Eventually, there's some sort of catalyst that results in a deleveraging, and so you reduce debt, you go into recession. But then policymakers come in, they cut interest rates, they do fiscal stimulus, and they kind of short circuit that deleveraging cycle. And so by the end of that cycle, when it starts to, kind of go into the next positive cycle, you have a higher level of debt to GDP than the prior time, and interest rates are hit a lower high and a lower low than the previous time. And so when you string a bunch of those short-term business cycles together over multiple decades, you get higher and higher debt as a percentage of GDP, and you get lower and lower interest rates. And so what the long-term debt cycle kind of focuses us on is after enough of those, after a long enough timeline, eventually interest rates hit zero or even slightly below zero in some cases, while debt is extraordinarily high. And that train has run its course. And so policymakers switch to other types of policies that can start with, creating new bank reserves to buy assets, or then you can combine it with much larger fiscal stimulus than normal. So you put a lot of money into the economy, and so eventually what you do is you devalue the currency, which basically reduces the debt load as a percentage of GDP because you boost nominal GDP through inflation and growth while holding rates below the inflation rate. And so, that's how they got out of the 30s and 40s trap essentially. And so we're kind of going through the same cycle now. But of course, if you're a bond holder or a cash holder, you do very poorly in those types of decades. I mean, if you look at a long-term chart of the inflation adjusted returns you earn from buying and holding 10-year treasuries, for example, from the 30s all the way through the 70s, you pretty much had negative real returns, inflation adjusted returns on those assets during that time. There's like a brief window in say the 50s and early 60s where you could make a small positive return, but for most of that 40-year period, they were just money losing assets. Whereas, they've been very strong from the early 80s all the way into the 2010s. But it seems like we're kind of gearing up towards another one of those periods of just treasury yields being below the inflation rate, failing to keep up with that because of where we are, how much debt there is in the system. Policymakers don't have a lot of room. And so I basically started incorporating macro into my stock selection process pretty early on. I mean, it's especially, coming of age during the great financial crisis, naturally made me somewhat macro aware.
Mm-hmm.
And then I kind of gradually added to it, learned to it. And so in addition to learning about stock investing, I'm also learning about macro and some of the investing legends over the past several decades that have, had a lot to teach about that. So Stanley Druckenmiller, Ray Dalio, investors like that I could learn from and kind of incorporate it into my stock analysis. And so, because precious metals are one of my first investments, that's always been an area that I've been pretty knowledgeable on, that I followed pretty closely. And so that naturally, can lead to cryptocurrency after a certain point. And so I got interested in that. And a funny thing is, I mean, even though I had a technical background, it's like we were talking about before about missed opportunities with investing. I mean, I had a friend that was like mining Bitcoin on her computer back when you just needed a high-end graphics card to do it. And And I was like, that sounds neat. Like maybe I should do that. And I was like, maybe next weekend. I just never got, it was kind of hard and I was busy with all the other stuff I mentioned, right? So I was working, and I was like, yeah, I just didn't get to it. And then of course,
Oh.
that was like a $100 million missed opportunity if you just had been someone who, did that. But again, even if I did that, I probably would have then sold them when they tripled,
Mhm.
right? That's the classic. People think, if only I had bought Bitcoin when it was $1. Well, it's like, yeah, you would have sold it when it was $5,
Yeah.
right? Most likely. And
Totally.
so, so I had a couple different points where I would come into contact with Bitcoin. But it's after I kind of, saw it go through enough cycles, eventually I started paying attention to it more when it became large enough that it was kind of on my radar as a macro asset. And so I started kind of treating it in the same way that I treat, let's say, precious metals, where I'm viewing it as a commodity that I'm also, incorporating into a portfolio.
Well, before we transition to talking all about Bitcoin, I just want to talk about sort of where you see the next 5 years happening with the market. I mean, it sounds like you're one of the people that agrees that we're probably headed for another potentially major crash. Some of the macro strategists that I follow, they're predicting a crash that rivals potentially even the Great Depression because all of this debt just needs to really shake out, and that precious metals will soar. Hopefully, it would make Bitcoin soar. What are your thoughts on it in the future, and also potentially even how it would affect the dollar?
So it depends on the roadmap that policymakers take. And so one of the challenges of being in a macro heavy environment is that a lot depends on what policymakers decide to do. Whereas if you're in an environment where it's not a macro heavy environment, it's more about the bottom up fundamentals. And so, I think for most of this decade, we're going to look back and see that this was a rather inflationary decade. Maybe not every year was inflationary, but overall it was more inflationary than the 2010s, and that interest rates spent most of their time below the inflation rate. So if you were holding cash in a bank, if you were holding treasuries, you're probably going to get devalued over the course of this decade, maybe not in straight line, but that those will, in hindsight, not have been very good investments. Whereas real assets, I think, will generally hold up better. Now, for the risk of a crash, there are certain, say, steps that policymakers could make, like if they were to try to tighten in a similar way that they tried tightening in, say, 2018, 2019, right? So I mean, 2017, 2018, leading up to that, kind of big dip we had in late 2018, I think we could have another event like that where, inflation starts to run hot. The Fed says, okay, now we can't keep calling it transitory. We have to
Taper.
start kind of tapering, and then you could get the market freak out. And so in general, I would be buyers of those types of corrections, crashes. So I have generally a pro-inflationary, pro-asset point of view for the decade, but I'm not leveraged to that idea, right? So if we have these pullbacks, I have, say, money set aside and some cash or tips that could, say, rotate into some of those, periods of weakness. And so, I can certainly envision scenarios where you get a big, say, deflationary crash. But I think that because, the say the government balance sheet's so leveraged, I think that much like a lot of these kind of corrections we've had over the past several years, I think it'd be somewhat brief in the sense that policymakers would probably rush in, devalue the currency more, and try to prop that up again. As for the dollar, I mean, if they try to taper, then they risk the dollar spiking, and you have kind of that's kind of what happened in March 2020, where then the foreign sector might have to sell some assets in order to get dollars, right? And that can negatively affect U.S. assets. And so we're in an environment now where because the United States net international investment position is so low, meaning that foreigners own a very large percentage of our assets, it's very hard for the dollar to go up strongly and for asset prices to also go up strongly. We've had over the past 3 to 5 years, we've had a pretty strong inverse correlation there. And so I think that, that's kind of a headwind that could face markets. But I think that overall, when we look back again from like towards the end of this decade, I think there will probably be a dollar bearish environment because I think the United States is probably going to increase its money supply at a faster rate than other developed countries. That's what we saw over the past 2 years since say COVID. And so I think that's set to continue with the U.S. probably having somewhat higher inflation rates than Europe or Japan, and holding its rates at a similarly low level. And so we end up with a more negative real rates than some of those other countries. But overall, I think the story of this decade will be that most fiat currencies devalue versus hard assets.
Well, again, I think that's a great value proposition for Bitcoin, right? So you shared that you discovered it early and you didn't take advantage of being able to mine it at that point. But so tell me about the transition that happened where all of a sudden you said, actually, Bitcoin's something that I'm going to take a look at and invest in.
Yeah, so I mean, the first phase was that really early on one where I got an idea of how the technology works. I thought the technology was great, and I was like, I have no idea how to value that, right? And especially because we're talking back then, it's a very tiny asset,
Yeah.
and so I was like, that's neat, but I'm not like a cypherpunk, and so I'll
Right.
yeah, like good luck, guys. And then so I just kind of ignored it for a while. I had all this, I had health issues. I was like doing financial support. I was working. I was it's just kind of like you lose track of things. And eventually, when Bitcoin goes through those big bull runs, it captures media attention, draws people back in. And so, during the 2017 bull run, naturally, I had readers come out to me and say, "What do you think about Bitcoin? Should I invest in Bitcoin?" And I was like, "Okay, I clearly have to revisit this now. It's a much bigger asset." And so I did a report on it. It was towards like November of that 2017 bull run, and I said again, I like the technology, looks really interesting. Here's a couple of different ways to value it. And my overall conclusion, I had kind of two concerns with it. One was obviously that it already had a massive price run up, so I was like, it's a very euphoric market. That concerns me. And then two, I was worried about dilution, right? So that was kind of the one of the worst moments for say Bitcoin dominance, right? So you had the rise of all these other tokens. You had Bitcoin Cash splitting out of Bitcoin. And I was like, so, even though, say, Bitcoin's scarce, what if the market just distributes into all these tons of tokens? How can I say which one's going to do well over a given period of time? And so I said, at this current time, I'm going to go ahead and pass again. And that ended up being the right decision because you had a blow off top and then you had a crash and then you had a consolidation that lasted a few years. And so it underperformed many other asset classes from that point. But I kept watching the space. I mean, I didn't have like my opinion set in stone, and I saw some of those concerns answered. So obviously, the crash and the consolidation took away the price euphoria, and then we started to see that the network effect of Bitcoin in particular strengthened. Right, so Bitcoin Cash and these other hard forks kind of failed to capture any meaningful percentage of the market share, and we started to see stronger and stronger network effects arise around Bitcoin and then Ethereum as well. But basically, only those two kind of achieved a certain level of critical mass that the long tail of other tokens didn't get. I started to see, the groundwork being laid for institutional adoption, right? So we started to see places like Fidelity kind of roll out these custody solutions that larger pools of capital could get into. And so I was kind of watching it for a while, and then in early 2020, when we had the COVID crash, I was closely watching precious metals because I knew that there's going to be a lot of fiscal stimulus coming out of this, and of course during the heart of the crash, you had gold go down, you had silver go down even more. I mean, silver crashed, and so that was like a buying opportunity of a lifetime. But I also saw that Bitcoin and other cryptos were doing the same thing, and they were acting just like precious metals. And so on the upswing in April, I was like, okay, now I'm in Bitcoin. And so I recommended it to my research subscribers when it was like 7,000
Mhm.
in April 2020. And then it was like it wasn't say go all in on Bitcoin. It's hey, I'm going to start including Bitcoin in my portfolio. I think it's actually really well positioned here. I started reading more about it. I kind of learned more details of the algorithm, right? So I went into a greater technical depth than I did with my prior analysis. I started, just kind of researching it from a bunch of different angles, going into specifics of how Bitcoin's different than all these other tokens at a more complete level than I had before.
Mhm.
And so I kind of started building my overall investment thesis. And eventually, during that kind of mid 2020 period, I allocated to it pretty heavily because I was looking at, say, that the halving cycle it goes through.
Yeah.
So, and so I kind of just said, okay, the macro environment combined with, the network effects that build up, combined with the, it's long consolidation. And so I basically had a pretty high conviction view that it would do pretty well going into, say, 2021. And so I've been pretty much bullish ever since. During the mania earlier this year, when every cryptocurrency under the sun was going like vertical, I started to say, okay, I'm still structurally bullish here, but it is the whole space is getting frothy,
Mhm.
and so basically make sure you have risk management in place. That obviously means different things to different people. It means it's not a good time to be leveraged to it, not a good time to be shocked if you see it go down.
Mhm.
So this has been a larger correction than I was maybe expecting, but overall it's been an environment that's done very, very well for that asset.
So, did discovering Bitcoin make you think differently about economics? Like, did you read Saifedean's book and maybe explore Keynesian versus Austrian economics more? And off of that, did you see Bitcoin as a future currency, a future, store of value, a global reserve asset, or just something to expose yourself in your portfolio?
Well, so a lot of people kind of explore economics through Bitcoin, whereas, from my end, because I was already focused on macro pretty heavily, I already was familiar with all those different schools of economic thought.
Hmm.
And obviously, I don't go into some of the individual ones as deep as specialists do in those areas, right? So I can't say quote some of the people in the thinkers in that space the way that you say Safedine can, for example. But I was familiar with all the different schools of economics and how I use different pieces of them to kind of interpret data that's happening in the economy. And so it hasn't really changed my outlook too much because again, I partially came from a precious metals background from a young age, and so I already kind of had that, view that I was never ever since I was a kid, I was never super into fiat currency. I was like, we literally have these pieces of paper
Yeah.
that have no value, but people think they have value. And so ever since a young age, I was like, well, I want to store most of my assets not in paper. I want to store it in stocks. I want to store it in precious metals. I want to store it in real estate, whatever the case may be. And so this to me was like another asset that I could add to my arsenal to do that with, but one that I thought had, one of the better opportunities for long-term growth and capturing market share from other types of assets because it's a global distributed protocol that even people in emerging markets that have a smartphone but they don't have access to stocks in the same way, well, they can still buy some Bitcoin, and we see overall that it's just in many ways a technology that adds a lot of value, right? So it's a permissionless decentralized ledger, and so I said, okay, I think kind of combining the idea of gold with a tech stock, I think this can do very, very well. And learning from my prior experiences of, say, selling Adobe or Microsoft too early and having to buy back in at a higher price, I said, okay, well, I'm not going to make that mistake with Bitcoin, right? So I'm not going to say buy so much that I'm worried about, say, 50% drawdowns. And I'm just going to buy an amount that I think is appropriate for my risk tolerance, which for me was pretty high because I did a lot of research on it. And I said, I'm just going to let this run for years and let that segment of the portfolio do whatever it wants because if I'm wrong about that thesis and Bitcoin goes down, the loss of that investment is not going to change my financial life. On the other hand, if I'm correct about that investment, and that goes up by quite a bit, then that can add meaningfully, to my portfolio gains. And so far it's been a wild ride, but it is up notably from my cost basis, and we'll see how that continues to go. But for me, I watch more than just price action. I watch the fundamentals, right? So I look at what's happening on the Lightning Network, for example. I look what I've been following the miner migration out of China and the distribution there. So I started incorporating, I was looking into some of the finances of the public miners or the economics of buying your own miner, for example, and kind of going into all those different avenues. And so it's basically it's a subject that you know, there's only so much that can be said about gold.
Hmm.
And but whereas Bitcoin, it's like, you can always explore new avenues because it's always changing and growing and getting better over time.
Well, going off that, Bitcoin is so nuanced. And I think that for the general public, especially when the price is so high, that's why I've heard a lot of people aren't going in. They just think it's too late, it's too expensive, it has that volatility. So I don't know if you could, if you had like an international platform where you were going to be on a commercial for, I don't know, a minute and everyone in the world was going to watch it with, general finance backgrounds or no finance backgrounds, what would you tell people about Bitcoin? What would you want them to know?
I would show them the logarithmic price chart. I think it's one of those things where a visual is worth 1,000 words. And so I would just basically show the logarithmic price chart and say, look, it's had multiple bubbles, where it's been a mania, it's gone up, 10x in a short period of time, and then it's collapsed in price, and then it's kind of consolidated. And I'll say every single time this happens, people think they're too late. Like I thought I was looking at Bitcoin, at say 10,000 in 2017. I was like, this is a very big asset already, right? And so, until that cooled off a lot, I didn't really want to get into it. And I'd say, look, if you know, my argument for a while has been that you don't have to be all in on Bitcoin. It's just I think it's time where it's proven itself enough that a non-zero position is appropriate for most people. And so you can bet a couple percentage of a portfolio on it, for example, and at least have exposure to it. And that'll make you learn more about it because you're kind of watching the price more and you want to learn more about it. And then you can dial that up if you have higher conviction, if you learn more about it. And so basically, I would just show that logarithmic price chart. I would say, I would kind of list all the advantages of it. Basically, it's a network that anyone can access, anyone with a basic internet connection can access. That they have the ability to self custody a bearer asset. that they can send permissionless payments to people. And so they can kind of take control over part of their financial life that maybe in many markets people couldn't do before, right? So there are only so many tools available to them to save money. And then when you add to it the fact that, even separate from the asset, Bitcoin is a monetary network. And so we're seeing things with, like, say, the Strike app and the overall Lightning Network. We're seeing that it can become a foundation for many types of other things as well. We can see stable coins potentially run on it. We can see smart contracts run on it. We can see, fiat to Bitcoin and back to fiat payments. So international payments using Bitcoin rails. They're basically, there's a really kind of, big spectrum of things that you can do with this technology, because every day you have thousands of developers working on making it better. So it's kind of like that combination of gold and a growth stock.
Totally. Well, you mentioned that you didn't expect this correction to last as long as it is. Can you talk a little bit more about that? Because I know there are a lot of people out there that are really frustrated, right, at the sideways chart action, the price action, and they're just wondering when the momentum's going to come back in and what it's going to take. So, what are your thoughts on the volatility and the drawdown?
So overall, I mean, I think grayscale was a large part of it. And it's not their fault. It's basically just the structure of how it works. So basically, in addition to the normal demand for Bitcoin, there's also demand for that neutral arbitrage trade where you could buy grayscale at, that's the Grayscale Bitcoin Trust. It's one of the publicly traded vehicles that people can access Bitcoin with. And generally those shares trade at a premium. So if Bitcoin, for every dollar worth of Bitcoin the trust holds, the trust might trade at $1.25, right? So you're paying a 25% markup, and that changes over time. But the way that works is that, accredited investors could buy into that fund at NAV. So they basically would get Bitcoins, put it into the fund. They could buy the shares at net asset value. And the only catch was they couldn't sell it for 6 months. They had to hold it for 6 months. And after the 6 months ends, they can then sell those shares, including for whatever premium that they're currently trading at. So a neutral arbitrage trade, a sophisticated investor could say, I don't know what Bitcoin's going to do, but I can buy into this Grayscale Bitcoin Trust at NAV, and then I can short an equal amount of Bitcoin. And after 6 months, I can close those trades and sell the Grayscale Bitcoin Trust at public prices for, say, a 25% markup, and just kind of capture that spread. And they can do that twice a year. And the way that works is that, because Grayscale is not redeemable, Bitcoins flow into Grayscale, but they never come out except for paying its expense ratio, which is very small. And so that's kind of a one directional thing that kind of pulled Bitcoin off exchanges and into cold storage. And so that was that, for the second half of 2020, Grayscale was the biggest buyer of Bitcoin.
Hmm.
And so again, some of that was natural demand. People wanted to own Bitcoin through that fund, but also, some percentage of that was the neutral arbitrage trade. And so eventually, because of the rise of competition, other types of funds, Grayscale's premium went away. And so there's no reason to do that trade anymore. And so there's still natural demand for Bitcoin, but that neutral arbitrage trade went away. And so, of course, when you have that, we also had a mania that I started to get concerned by in, say, February, March, April, May of this year, where every token under the sun was going straight up, right? So even some of the ones that are made as jokes or that have poor fundamentals, they have no development work really happening on them. They're some of them are clear scams. Some of them are like offshoots, like kind of like a niche, kind of undeveloped offshoots of other tokens, and those are going like up like 5x in a month. And so it's one of those things where, it's a shame that so many people kind of piled into some of the projects that are not really worth anything, because of course when you have the drawdown, a lot of them, even though they went up really fast, people that bought into that mania, they get pulled down by buying into the wrong token projects. And so I think it's over time that, it's natural that we're, the Grayscale Bitcoin Trust is unwinding, so that's behind us now. We had to clear out a lot of this malinvestment, a lot of this, kind of people pulling into the wrong types of tokens. And so, it's most indicators show that the Bitcoin market never got as hot as it did in, say, 2017 or 2013 or 2011, for example. And so that's one reason why I wasn't expecting it to, say, go down as hard as it did yet, because it wasn't as hot as those previous times. But it makes sense given how much speculation there was in the space, and with that Grayscale trust arbing away. And so I think overall now it's kind of this consolidation phase. We're starting to see signs that the coins are flowing back into the strong hands, right? So a lot of the people that, say, bought in at the top then sold at a loss, and the people that are, say, dollar cost averaging into it, or institutions that are saying, okay, here's my opportunity to buy Bitcoin. Whereas, a lot of them are maybe looking at Bitcoin, thinking about buying it, but went up really fast, like, oh, we missed it. Well, then when it crashes, they're like, okay, now we can actually start kind of allocating to it and getting that process in place. And so we are starting to see kind of a rotation back into strong hands. And I think it's one of those things where that kind of, it could take a while, but that sets the foundation for the next bull run because it means that, coins are coming off of exchanges, coins are going into cold storage, and there's only so much supply available. So eventually that starts putting a price floor and pushing it up over time.
Are you a subscriber to the stock to flow model? And do you think we will get, the high price that predicts for potentially the end of this year?
So not precisely. I found that the stock to flow model charts that Plan B put together were very useful for understanding Bitcoin's price history. So those types of charts are what helped me kind of start looking at Bitcoin in logarithmic terms, seeing how the halving cycle fits into those price rises. So they were actually, I found that the content he produces is very useful. But I've never been one to say I think that I agree necessarily with the target price. I'm not saying it's wrong. I'm just saying it's not it's not a price target that I necessarily agree with. And so, I'm not kind of tied to that what the model says the price will be, but I do think that sort of those charts and that kind of way of thinking about it is pretty informative. So eventually, as Bitcoin's inflation rate keeps going down, in other words, its flow to stock ratio keeps decreasing, or its stock to flow ratio keeps increasing, that does eventually, basically make it a harder and harder form of money. And it makes it so that anyone who wants to buy into the network, instead of buying into new coins, they have to be able to get existing coins from someone else because there's not that many new coins being generated. And so that can, push the price up until Bitcoin eventually reaches whatever steady state it's going to reach. Whenever it kind of reaches its the closer end of its total addressable market capitalization. And so, again, I think they're informative charts. I just don't necessarily subscribe to a specific price model.
Got it. So if you had to guess, what would the price be at the end of this year and let's say in 5 years?
I mean, so that's challenging. One of the ways I like to model it is as a percentage of estimated gold market capitalization. And because it's kind of competing in that market, but also potentially can go bigger than that market because it has more use cases. And so most estimates show that, gold's estimated market cap is somewhere around, say, $12 trillion, of which 4 or 5 trillion is used for say, specific purpose of investment by private citizens and institutions. And so I think, over the very long run, Bitcoin could easily reach half the market capitalization of gold, maybe the full market capitalization of gold. And there are very bullish scenarios that can go above that because it can be used for things that gold can't be used for potentially. And so, I think that over the year long run, I have a, target of at least several trillion dollars in market capitalization. And I think there's a really big range for what that'll be, right? Because it's this new technology. We're exploring how big it can get. We're exploring how many problems it can solve. Now, for the next 6 months, for the rest of the year, I don't have a strong outlook. I'm watching to see if it holds this 30,000 price level, more or less. It can dip below for periods of time. I'm going to see if it can hold that level. And I have certain kind of price levels that I'm watching for kind of confirmation of the renewed bull run. So if it starts to break over, say, 42,000 reliably, that'd be really good signs that the bull market's back on. And so I'm just going to be watching these on-chain indicators. I think, going into 2022, I'd be pretty bullish on it, but 6 months is a pretty close timeline. So it's hard to say. Again, that's predicting what other people will do. So it's predicting other people's emotions. But overall, what I'm watching pretty heavily is the fundamentals. So things like what's happening on the Lightning Network. That's probably one of the things I'm watching closely. I've also been exploring Bitcoin mining,
Mhm.
right? So there are services now like say Compass, where you can buy a Bitcoin miner and you own it. It's not like a cloud service. You own the miner, but you can then host it in a facility that they have a marketplace for. And so I'm basically using the hosting as a service for the Bitcoin miner that I own. And when you kind of go into the economics of say how much Bitcoin a miner can generate versus how much cost you pay in electricity, how much the miner costs. I think that's another interesting way to dollar cost average in a Bitcoin because you buy a miner and then let it run for a few years and you end up, with a pretty good return on investment, assuming Bitcoin chops along sideways or goes up over that period.
Gotcha. Well, I noticed you didn't actually give a price, but I'll let that go. As far as just threats to Bitcoin, is there anything that you see that could potentially take it to zero?
So, basically some sort of security flaw could take it to zero, right? So, I mean, in a classic sense, I mean, there are people that'll never sell their coins and they're willing to buy it. So that kind of, makes a floor for how low it can go, right? So the joke is if Bitcoin goes below a certain price, I'll buy all of Bitcoin, right? So it literally can't go to zero unless, of course, something breaks the chain. So some sort of, persistent, say 51% attack that can't be addressed, or other sort of security issue, maybe some sort of massive bug that say, results in an unintended fork and breaks the community. There are kind of tail risks I can imagine that could break it. I think another big risk would be some sort of coordinated draconian ban against it. And so that'd be, there's some precedent in, say, American history of gold being illegal for Americans to own for 40 years, which is kind of funny when you think about a free country and you can't own a benign metal, right? So, because it's too much of a threat. And so, in jurisdictions that have big property rights, right? So rule of law, I generally find an outright ban to be unlikely. We've even seen some emerging markets move to ban it and then kind of pull back and say, well, maybe not. Maybe actually we don't want to ban ourselves from this network. And so we kind of revisit that. But I think if you were to have, say, a coordinated ban where U.S. financial institutions are not allowed to connect to the Bitcoin network. European financial institutions not allowed to connect to it. We're already seeing that out of China. If you were to have that all kind of happen, that could really keep the price low for many, many, many years. And so I don't know if I don't think that'd be enough to push it to zero, but that would be one of the most damaging cases from an investment standpoint. And I think, eventually it could still potentially even win against that scenario, because it's like one of those things where countries that move to ban hard assets are generally the types of environments where you end up wanting to own a hard assets when you look
Right.
back several years, right? So they don't ban those assets when things are going good for their currencies, right? So I think, Bitcoin could eventually make a comeback, but that would be one of the major tail risks that could, that could bring it, that could bring it down in price considerably. So I would say that, for it to actually go to zero, it would take some sort of major security flaw probably to bring it all the way down.
Really interesting. Well, I'm going to start to wrap up here, and I want to ask you a more philosophical question. There are a lot of the big Bitcoiners out there that talk about just the hope that Bitcoin could provide to fix problems like wealth inequality, and even that trickles down to things like homelessness and just poverty. Do you have any thoughts on that? Like, do you see Bitcoin as potentially being a fix for some of the things that increasingly plagues societies across the world, but for sure here in America?
Yeah, we're seeing it in a couple different places. So I think it's, you know, I think it's concerning when people think that it'll solve everything, right? So, they get their hopes up that it'll fix everything, and so I don't view it as being able to fix everything, but I think it's a powerful tool that societies have to fix a lot of issues. And so, for example, in emerging markets, developing markets, frontier markets, it can be hard to have property rights, right? Or to have some sort of wealth that you can bring with you if you move around. So your access to, build wealth outside of a devaluing currency is very hard. And so, smartphones are basically becoming so cheap and so widespread that, even in those markets, the adoption rate is starting to go up pretty dramatically. And so that gives more and more people access to Bitcoin, basically a scarce asset that is protection from their local devaluation. And then if they ever have to flee their area, which as Americans is not something we think about very often, but it's happened in Europe, it's happened in many countries around the world where people have to flee their country, and they can bring those assets with them. And so I think that's a huge tool. We also see, for example, Russia's opposition leader. Their banks are often cut off, and so, but they can still accept Bitcoin, and they've actually been doing that. Reuters reported on that quite a bit. That they're relying on Bitcoin as kind of their insurance, where if the other payment methods fail, people can still send over Bitcoin. And so we are starting to see it solve these actual problems. And El Salvador is another example where you have low banking rates, you have all sorts of inefficiencies in terms of remittances, and all these fees that they pay. And a basic Lightning wallet is a way to basically bank the unbanked, and also to make payments cheaper, and to basically apply software to an analog problem. In developed markets, I think it's less impactful for some developed markets than it is for some of those emerging markets. But over the long run, and again, it gives people a chance to save in a way that they might not have saved if they're only if they're mostly focusing on, say, fiat currencies that are the interest rates are below the inflation rate. And I think over time, it just kind of it decentralizes the system a little bit more. I think in many ways people might end up being disappointed how far it can go, because I think that governments will still try to centralize certain things. And so, yeah, I think I am maybe expecting it to go less all the way than some of the really, the really bullish Bitcoiners. But I do think that it adds a lot of tools to the arsenal that people can have to protect themselves against all the things that these forces outside of their control can do to their money, to their, whatever their investments might be.
That's really insightful. Well, looking back on your life, I mean, you've been poor, you've been rich. I read, the difference in your vacations. You used to go to like motels, and then all of a sudden you're in high class resorts in Hong Kong. What's the big life takeaway when you look back on your life and your career? What was the biggest lesson?
I think it's about pursuing your passion, right? So, I mean, if you find something you like working on, then it's not really work. And you turn your hobby into something that makes money, or that at least, pays for itself, whatever the case may be. And so, it's one of those things where, money's important because it buys security, and it buys, freedom to some extent, but it doesn't fix things. It doesn't fix poor health. It doesn't fix, or I mean, unless it's specifically like you can't buy health insurance or something. But basically, money doesn't mean much if you have poor relationships, if you have poor health, if you, are always kind of wanting to catch up with your neighbor, or are more focused on showing people that you have wealth rather than just being free, right? So I think when money's applied appropriately, it can boost happiness. But I think people make the mistake of thinking if only I had a certain amount of money, I'd be happy. And so really, a lot of it comes from, I think, living simply, living healthy, trying to make the world a good place, and then have that habit of saving and investing so that you can, you know, use the money to increase your freedom and security more so than say materialism. And so on the side, when there's certain things you want to explore that are, say, expensive materially, that can be fine as long as you don't rely on them, you don't need them in order to be happy. And it really about using, I think, money more productively.
I love that. And just out of curiosity, are you still doing mixed martial arts?
Not anymore, not actively. That was something I did, when I started living with my father. He put me in martial arts, and I never really had a talent for it at first, but I just stuck with it so long that I eventually got good at it. If you do something for 12 years, it's
Yeah.
hard to be bad at it. And so that helped me keep me in shape from a very young age. And so I still keep it up with, I go running, I go biking, I go hiking, I go to the gym, and so I still maintain that, that health, that lifestyle, but I don't go and say, you know full contact sparring anymore. I think I've had enough injuries from that.
Well, I love it. You still have your warrior mind, so it's awesome. Final takeaways just about Bitcoin you want people to know.
I think the takeaway is that fundamentals and price don't necessarily go together. And so if you focus on the fundamentals, I think that's more important than just focusing on price. So for me, my question is not what is Bitcoin's price going to do in, say, a 6-month period. It's monitoring it to make sure that the network effects are constantly getting better. So how's Bitcoin's market share doing? How, what's the current news in say, institutional adoption? What's happening with the Lightning Network? What's happening with mining? And so for me, it's about following the development that's happening on that protocol more so than following the price. And I think that, ultimately, if you get the fundamentals right, price will follow. And of course, you can't predict when will price follow. Will it follow in 3 months? Will it follow in 18 months? It's hard to say. But if as long as you're paying attention to the direction of the fundamentals, then just like with a stock, eventually the price should follow.
Interesting. And side note, I love your voice. I grew up with such like a Mickey Mouse voice, and I've always wanted more gravitas. And when I listen to people like you, I'm like, oh, I want a voice like that. do do people comment about your voice a lot?
Yeah, I see it a lot. Yeah, it's one of those things where, you know, yeah, like, I mean, people, yeah, it's one of those things, like, I'm self-conscious about it sometimes, but at the same time, I do
No.
recognize that it's kind of unique. And,
I love it.
I guess it kind of fits the MMA background and
Love it.
that kind of, it all goes together.
I would take it in a heartbeat. Well, thank you so much, Lynn. How can people find you and talk to us about your newsletter?
So I'm at lynalden.com. I have free articles. I also have a free newsletter. And then for people that want to go deeper, I have a low-cost research service they can sign up to. And I'm active on Twitter at Lyn Alden Contact. So I post charts and other kind of, free insights there.